All right, I think we can go ahead and get started. We'll still have a few more people joining as we move forward. But hello and thanks for joining our Weathering the Storm webcast presented by SVN Saunders, Ralston, Dantzler Real Estate. My name is Tyler Davis. I'm a CPA and advisor at SVN in Lakeland. Joining me today from SVN are Gary Ralston, Dean Saunders, and Todd Dantzler. We're also very honored to be joined by Dr. Jerry Parrish. Jerry's the chief economist and the director of research at the Florida Chamber of Commerce. Jerry's going to be discussing the state of the Florida economy, our employment challenges here in Florida, as well as our future economic outlook. Jerry, thanks so much for joining us today.
Thanks, Tyler, and welcome everybody to the call. To talk about several things today.
Sorry, 1 second, Jerry. A few housekeeping things, if you don't mind, really quick.
Okay,
We're going to do a small Q&A at the end if we have time. So all the participants, you should be able to see a Q&A section where you can submit questions as they come to you during the webcast. We're going to try to answer a few of them at the end. So feel free to submit those as we move forward. We're also going to do a few different polling questions throughout the webcast just to get a sense of our audience and kind of what everybody's thinking about in terms of the current economy, your feelings on things, also what you want to see from us moving forward for future webcasts. So I just launched the first polling question, which you should see on your screen right now. And so you should see in the poll section where you can answer that. The first polling question is, what is your overall sentiment about the Florida economy for the next 12 months? Is it fear, concern? Are you cautiously optimistic? Do you think we'll recover quickly? So those are the four options, and we'll give everybody a minute or two to respond. Okay, so it seems like we have about 80% of responses in, and the most common answer is cautiously optimistic, followed by concern at 39%. Just a brief overview of kind of what we're going to be talking about today. Again, we're going to talk a big picture first with Jerry about the Florida economy, employment issues, things like that. Then we're going to get in, Gary Ralston's going to discuss on Florida commercial real estate. Dean's going to add in a few things related to Florida land. Todd is going to add some commentary on both of those sections as well. And then we're going to do a Q&A at the end. So again, please submit questions via the Q&A feature. Jerry, let me pull up your slides and we'll move ahead.
Thanks, Tyler. Today I want to talk a little bit about the economy, a little bit about where this virus is in the state of Florida, and just some of the data that we're starting to see at the national level and at Florida's level. First of all, the way we look at this at the Florida Chamber is, we've been working on a plan for Florida that's called Florida 2030. And it's a strategic plan, a privately funded strategic plan. And we've been working on this for quite a while. Let me see, there we go. In that is our goal of going from where Florida is now. Florida was an independent country. We'd be the 17th largest economy in the world. And we want to be the 10th by 2030. And to get there, we came up with 39 goals to get our way in there. And we're not backing down from these goals, even though certainly there's something big happening in the economy right now. We still have a plan, and it's the same plan we've been working on for a while. So certainly it's going to be a little more difficult to reach these goals. But the way we've got the Florida economy laid out, you can see on your screen now, it's Florida's 6 pillars. We've got to get all of these 6 right to get what we want, which is global competitiveness. We want to create jobs, high-wage jobs in the state of Florida, but we still want to have a great place to live and have great communities to live in. That's our goal. One of the ways we keep score with our progress toward the goals is the Florida scorecard. And let me see if I can hear. This is a website that's up 24 hours a day. It's at thefloridascorecard.org, and you can find state level data and county level data. A little top drawdown box to the top right. Well, you can pull down and get your county. Now, what may be interesting to you, you see here, Florida is still listing a 2.8% unemployment rate. I'm going to talk more about that, but what you have to know is we're not going to get our numbers from March, job numbers, unemployment rate numbers here until tomorrow. They'll come out about 10 o'clock in the morning. Certainly they're going to jump up, the unemployment rate's going to jump up in Florida. I'll talk a little more about that here shortly. But first of all, one of the things, if you haven't been getting the Florida Chamber's daily email, every day we send out an email, and you can sign up for it at flchamber.com/coronavirus, and you'll get a bunch of info, and you'll also get a map. And let me see if I can click it. There you go. Every morning we put out this map. Here's how many cases in the state. Here's how many in your county. Here's how many people have been tested. Here's how many tests that we've had. We do this every morning. Been doing it for, I guess, the last 3 or 4 weeks now. So you can see how your county is doing. What's interesting about this is about 58.5% of all the cases, current coronavirus cases in the state of Florida, are in Southeast Florida in these 3 counties. It's Broward, Palm Beach, and Miami-Dade. So you think, well, there's a lot of people down there. What does that really mean? Well, it's about 58.5%, but only about 28.5% of Floridians live down there. So they've certainly got a more dense population of coronavirus cases down there than they do in other parts of the state. And what you're probably thinking about is, if you're watching the news every night, you see what's happening in New York. I will warn you a little bit. Probably New York is peaking right now. I know the president came out yesterday and said the cases are peaking. He's not talking about Florida, though, I will tell you. We're still 2 or 3 weeks away, and maybe a little longer, maybe a little shorter. There are different models out there predicting different things. So actually, the bad news is you're going to see cases continue to rise for some unknown period of time here in the state of Florida. But what's interesting about this is, let's normalize this by the amount of population. Here's the number of people per positive COVID-19 case in every single county in the state of Florida. You can see Miami-Dade is the most dense at, 1 case for every 337 people. And you can see your county there where you rank. I've circled Florida there, number 8 in this category, where we have less than 1,000 people now for every single positive case. But what you got to remember is, compared to New York City, we're anywhere from, 7 to 10 times less cases per capita in the state of Florida than they are in New York. Calculate this every few days, but what we have to feel, certainly is fortunate that we don't have more cases than we do. Certainly with social distancing and things like that, expect that we're not going to have the density of cases they had up there. But still, it's something that we have to think about, and certainly that's affecting business. Now, which counties is it going to affect the most? Well, one of the things we've been preaching up here, and I've been, working with economic developers all over the state for the past few years, is let's make sure we're diversifying our economy. And when I ask business people, typically in a room with them, asking the question, where do you think Florida is as far as most or least diverse state in the country, 1 being the most diverse, 50 being the least diverse? Most people answer about 35 to 45, that they think we're less, we're certainly in the bottom half of diversities. But that's actually not true. Here's our diversification right now. We're 20th out of 50 states. It ranges typically from about 16 to 21, depending on the time of the year, because this data is not easily adjusted. But I think there's some interesting things in the area where a lot of you are likely from. Actually, good old Lakeland Winter Haven MSA, which we all know as Imperial Polk County, is actually the most industry diverse MSA for private sector jobs in the entire state, and it has been for about the last 9 months. So I think that bodes well. You've got the Orlando MSA at 5, the Tampa MSA, Tampa, St. Petersburg, Clearwater at 8. So I believe the I-4 corridor, you're actually going to be better off. I'm going to show you some other data about this, but I think that's the good news here for people in that central area of Florida, that certainly you're more diversified and therefore are going to weather the storm a little better. Now, one of the things I also plotted was over time took the Orlando MSA growth. It's in the orange here. This is just yearly job growth rates. You can see compared to Florida in blue and the U.S. in green that certainly the expansions are faster in Florida when we're in the expansionary phase. Yes, we've seen certainly in 08, 09 that the depths are as deep as deeper than the U.S., but that was followed by substantial job growth since the last recession. And so I think, certainly we're in a recession now. If you looked on the Florida scorecard on the business climate and competitiveness pillar, I've always posted it for the last probably 2.5 years, the probability of Florida being in a recession over the next 9 months. Right now, I will tell you it is 100% because we're in one. And we forced this recession on our economy to try to kill this virus and get to the other side of it. Now, what's that doing to the state of Florida? Well, you've seen it in the news, these jobless claims. And we got a new set of numbers this morning that aren't, sitting on here. The new number is another 181,293, which would have been the claims for last week. We always get them on Thursday after the week. So over the last 3-4 weeks, there have been 653,975 initial unemployment claims filed in the state of Florida. And that's a pretty good number. I know we were caught off guard like every single state in the country, because you can see in typical March since 2003, we were running about 8,000 or 9,000 jobs, 6 to 8, 9. Only in the worst of the recession were we running at 20,000 and 24,000. So honestly, we got caught off guard like every state in the country. They've really ramped up our capacity to accept these unemployment claims and getting in. So that 181, we've come a long way toward actually getting up to date this past week. I'm sure there will be more in Florida. Let's think about what that's going to do to the state. Reading the headlines, the headlines are horrible. The International Monetary Fund says we're going to have the worst recession since the 30s. Now, whether that's true or not, I don't know, but I'm going to show you here in a minute what I think. Goldman Sachs came out and says the downturn will be 4 times worse than housing crisis, and then an unprecedented recovery. Goldman was actually, one of their analysts came out right on December 31st, and he said that this economy is basically recession-proof. I saved the headline because that made me nervous. It's all, it always makes me nervous when things get too good. I'm an economist after all. They call it the dismal science for a reason, is because we're all somewhat negative. But I want to show you kind of what has happened in history, and let's compare what kind of the forecasts are for the economy over the next few months. Over time, you can see, I went back to the 30s and kind of added up the positive and negative here. But adding up the negative, if it's a single year like 38, it's a negative range here. But in the Great Depression, 1930 to 33, I added up the 3 previous years, and basically the economy dropped by nearly 30%. Now, what you see there is 1982, the last recession before the next 2 I'm going to show you, that even broke 1% on the downward side. So they haven't been that big, since right after the war. Since the 45 to 47 recession, that was a big one. Not as big as the Great Depression. But let's go and look a little further into history. 08, 09, and you may see some different numbers here than what you're used to seeing. There's GDP, real GDP growth that's adjusted by inflation. There's regular GDP that's not adjusted. It doesn't matter. I'm really trying to show you the relative size here. So hang on. So anyway, let's look and see what the forecasts are. Forecasts for the next few months are all over the place. I just took kind of a median sample for the next for this year, and what you may have seen is is minus 30% GDP, and 30% unemployment rates, and 32, the Federal Reserve came out. Basically, when you analyze that, some of the better ones and some of the worst ones all average look like that, we're going to take a big hit. We actually took a slight hit in the first quarter. We've got some of those numbers. The second quarter is going to be the worst. But I do want to tell you that a lot of the forecasts out there have the economy recovering and building steam again, at least by the fourth quarter. Some have the third quarter, but at least by the fourth quarter. But kind of putting this in context of the past recession, certainly a lot quicker and more sudden than the Great Recession that dragged out for a long time. But actually, the probabilities of recovering by the end of the year or early into next year, I think are pretty high. So I wanted to show you that. I also wanted to show you what I've been telling people to think about as a proxy for how much your county is going to get hurt. We have some job numbers at the national level. We won't actually have job losses in Florida until tomorrow at 10 a.m. So for the last 3 or 4 weeks, what I've been telling people to think about on a relative scale, here's a proxy for you to look at your county. Now think about this. The leisure and hospitality jobs is a percent of the private sector jobs in your county. In the U.S., the average is 13.3%. So if you're less than that, I think it's a pretty good bet you're going to be less affected overall. Now, the Florida average is 16%. The perception of Florida is is 35 or 40% of our jobs, but it's just absolutely not true. And with that I-4 corridor down there being one of the most diversified economies with a lot of good stuff happening from Orlando all the way down through Tampa, I truly believe you're going to be in better shape. Now, keep in mind that certainly there's issues, until we know when, travel is going to come back. And I'm at the office today. We're talking about the college football season and people probably burning down the state if we don't have a college football season by this fall. A lot of things, we're talking about up here. But really what you need to know is, the Florida Chamber Foundation is working on a plan. We're working on a recovery plan and have been doing it for the last month. We're working with McKinsey, a global consulting firm who's got a lot of expertise in the healthcare side, in the management side, and helping businesses and governments negotiate these kind of things. It's been really fascinating, some of the work that they've done and some of the forecasts that they have for the Florida economy. I will tell you, we'll have info once we see the job numbers. Remember, these job numbers, is, about 3 or 4 years worth of job growth that has been knocked out temporarily just during a little over a month. So, it is going to be difficult. But I will tell you, Florida has been the place where people wanted to go. Often show a map about where the next 4.5 million people are going to come to Florida and where they're going to end up. I'm certain that once this is over, in the phases that we'll see it, first we got to peak, then we have to find something that treats this, and maybe some of these antivirals that are trying now are going to treat it. Sooner or later, we're going to have a vaccine that works, but I believe we're going to get this economy back up and running long before we see a vaccine. But overall, I'm still bullish on the state of Florida. I believe that we are going to return quicker than most states out there because we have a plan. We have a governor who's, listening to plans and going to reopen in a thoughtful manner. Very convinced of that. But anyway, I appreciate your time. I'm going to stay on the line and be available at the end for questions. Thanks. Thank you very much.
Thanks, Jerry. That was great. I'm going to switch gears now and share Gary Ralston's slides. And Gary is going to speak on the Florida commercial real estate impacts of COVID-19. Gary, let me get this pulled up. Okay.
Thank you, Tyler. There is a direct correlation between residential real estate and commercial real estate. And so although there are some entities that publish data, Real Capital Analytics, for example, about the commercial pricing and so forth, commercial tends to lag residential. So if you're looking for early indicators, one of the things that we watch are housing starts. And so interestingly enough, being real time, this data was released this morning. Some of you may have seen it already. This is housing starts for March, 1.2 million. That is a drop from February, but it's above last year, March 2019. And then the graphic that you're looking at is from the St. Louis Fed's Research Department, and it takes us back to 1960. The gray shaded areas, as you may be aware, dealing with Federal Reserve graphs and charts are recessions. And the real issue is the balance between demand and supply. Demand is population growth, which results in household growth, which is the unit of demand for housing. So when we build a lot more than we have people to occupy, invariably it's followed by a recession or a downturn. And probably the most distinctive part of that equation, which we suffered and experienced, particularly here in Florida, is the last recession you can see at the right end of the graph, where we peaked with a whole lot more housing units than we needed, and then the decline. So this chart in Florida would be even more aggressive. Let's go to the next slide, if we could, Tyler, which is unemployment. We think that of the demand for commercial real estate being highly correlated to jobs. And so the more jobs we have, the more demand we have for commercial space. In this case, we're looking at a reverse engineering, which is unemployment. And you probably saw the press on that from this morning. Unemployment claims for the country are now up to 22 million. The chart shows unemployment as it's creeping up. They don't, it's trailing, so they don't have all the April data here. This chart's going to look a whole lot different in 30 days. Interestingly enough, 22 million people without jobs is a 13.5% unemployment rate. 13.5% of the labor force would be unemployed. At 15%, that's 25 million. At 20%, it's over 30 million. So it will be interesting to see how this all shakes out and the impact. Most of us in the real estate business are very pleased to hear the remarks from Dr. Parrish when he said this is going to be a quick bounce back and recovery. Let's go to the next slide, Tyler. Focusing in on Florida, Florida is about 6.5% of the U.S. population and about 6% of U.S. jobs. We're 7% of the housing units, so that means there's second homes here and people that are in Florida that have a home but maybe are retired and not part of the workforce. We are 14% of the population growth in the country. This is since the last census, and we're going twice as fast as the United States. This is a good thing. People moving to Florida is a major driver of our economy and growth. And that's why we have a positive location quotient for construction and a number of other industrial classifications. Let's focus on Florida commercial real estate. The next slide, Tyler, if you would. And we've kind of broken this up to the main food groups, starting off with retail. Well, there's a big difference across the retail spectrum between enclosed malls, shopping centers, and freestanding. The enclosed malls are, most of them closed today. And so obviously the tenants aren't doing well, the landlords aren't doing well. It is a veritable disaster. Strip centers and freestanding retail are a bit different. We think they're going to recover quickly. Maybe the best example of that is Dollar General. Dollar General, believe it or not, stock price is trading at an all-time high. So that's the case with some of the other providers. Walmart is trailing that trend, but close behind. Costco's in the same boat. So clearly, retail is going to change, and as a result, the retail real estate arena is going to change. The big concern is about half the tenants in retail today are trying to work out some sort of rent deferral or abatement. And we hosted a webinar that's recorded. You could go back and listen to if you like, that focused on some of the legal perspectives of the ability to defer rent. For the most part, leases are very much in favor of landlords. And so although the economics may be disadvantageous for tenants, it's going to be problematic for them in a major way if there is a duration to this crisis and stay-at-home shutdown. And when we go to office, one of the expressions that people think about is, well, this work at home is going to mean nobody will need offices anymore. And we don't believe that. We think there will be a bounce back. It will be different than maybe offices were before the crisis. But in reality, and this is a analysis quote from research, that traditional offices foster greater productivity and the ability to attract and retain the highest quality talent. That is a good principle for why office space works. And we think you're going to see this return to normalcy, but space that is different in some respects as we come out of the storm. Industrial, very little impact. Some small businesses have been shut down, but warehousing has continued to do well and prosper. And so we see that continuing to grow. It is particularly strong in our market, in the I-4 corridor, Central Florida, simply because of the geographic characteristics. 20 million people within a 5-hour drive means, we're the center of the best state in the country. Apartments, the big issue there is rent collection. About a third of the tenants are not paying their rent. And it is thought that the government programs, unemployment kicking in, and other things may help to solve that. But at the moment, there's a minor tsunami that apartment owners are looking at. The other sectors, hospitality, hotels, that is a disaster. And the return will be correlated when travel comes back, both for business and for leisure. It's interesting, I put self-storage in. The self-storage is a separate sector that has continued to do well, interestingly enough, even in this time. And the prospects are that it may work well in the future in a continuing basis. Part of the driver for that may be some consolidation of households to housing units. So that's for those of you who are parents, maybe something to expect. Your children may decide that although they finished college, they're going to move home. Well, that is a drag on housing demand, but it's a big positive for self-storage. Let's go to the next slide. Thank you. Tourism. Jerry mentioned a little bit about that. Tourism is the third largest industry in the state, 126 million tourist visitors, $94 billion of spending. And it ranges from lodging, eating and drinking, the restaurant industry, transportation, retail expenditures, and then, of course, entertainment, our theme parks. There are 1.5 million jobs that are tied and impacted directly to tourism. So the issues that we're going to look at, since clearly it's ground to a halt, when will people feel safe to travel again? That's going to be the issue. And will vacation rentals be allowed? And when will the theme parks, Disney, SeaWorld, Lego World, Universal, when are they going to open back up? And of course, small beach towns. One of the big drivers of the economy of the coastal cities are second homes in tourism to beaches, both in-state and out of state. So when is that going to come back? Sporting goods.
Yes.
Major League Baseball.
Yesterday you might have seen some stuff. You might have seen some stuff in the news yesterday about the governor declaring WWE an essential business, and some of these professional sports leagues have the ability in Florida, based on DeSantis's ruling for WWE, to be deemed an essential business in Florida, which would enable them to, broadcast live sporting events. He mentioned a lot of there's been a lot of buzz about a Tiger Woods versus Phil Mickelson golf match, things like that, that there's a chance you could see Florida kind of be one of the leaders in terms of hosting these live events, which I do think are important to people and provide an escape to people throughout the country. Tampa's supposed to host the Super Bowl this winter. What's the impact of this then? Tom Brady's in Tampa. Could there be an empty stadium this year? Things like that. Florida's a huge sports state, a lot of tourism related to it, a lot of people coming down here to make trips out of it and vacations out of sporting events. So these are all major issues that we have to figure out how to answer.
Very good. Thank you very much, Tyler. Let's go to the next slide. As we said earlier, Florida is all about population growth. The magic pill for tourism and travel is probably, as Dr. Parrish said, some sort of medical solution. We keep hoping sooner rather than later there will be a miraculous discovery of some sort of medicine that will solve and make things different with COVID-19 and, of course, a vaccine. So that's when that happens, this becomes totally in a rear view mirror. So if we don't have that, or how long it takes to get it, is going to have a big impact on the population in migration. And the states that we've benefited from more than others are, of course, New York, New Jersey, and California. Will that continue? We think that's, it depends on what's going on there. At the moment, New York, California, and New Jersey are hotbeds for the virus. So people may be pleased to escape when they can. The final comment, and frankly, this is something that Tyler shared that we agree with. You may want to sound in as well, that it's about the age. Florida's median age is, of course, much higher than the nation. And so we have this in-migration of older citizens, which has been historically the case. We think we're going to see more of it in the future. The slides that Dr. Parrish had about the concentrations of the virus in Southeast Florida says something about density. I don't think it's a coincidence that is the most dense part of our state. So a little more spread out may be beneficial both for the state and for some of the less dense parts of Florida. And that's a good setup for the expert on Florida land. So Tyler, I'll let you introduce Dean.
Yeah, next up is Dean Saunders. Dean's managing partner, SVN Saunders, Ralston, Dantzler, is an expert on everything Florida land. So Dean, with that, I'll turn it over to you.
Okay, how y'all doing? If you hear a lawnmower in the background, that's because the yard guys are doing my yard. So sorry for that inconvenience. But part of the notion behind this is just to, since we're all gray-headed or no hair or less hair than others.
Careful.
That just suggests we're seasoned and experienced. And I think between the three of us, we've got well over 100 years of experience in Florida real estate. And so I like to compare or look at what we're dealing with what we've dealt with in the past. And so on the land side of things, I'm dealing a lot with agricultural markets, with timber, with recreational markets, single family development, and even state acquisitions. And so all of these things get impacted with different events and different, because each segment is a little different. Timber, for example, and a lot of these are counter-cyclical. They're not necessarily always running with what's happening in the general economy. And sometimes when the general economy is going good, the ag markets could be in the dumps. And that is largely because they're dependent on commodity pricing. If there's an oversupply overseas somewhere in a product, it could impact our values. Less so in Florida than it is in the Delta and in the Midwest, but we're still impacted by all of that. And after the Great Recession, ag markets were on fire because commodity pricing was up. A lot of that driven again by this global supply issues of a lot of the agricultural commodities that we could supply in this country. And so land prices were, in many cases, 3 times what they were up in the Midwest and in the Delta. So again, just underline the fact that sometimes the agricultural markets are running counter-cyclical to the overall economy. This particular crisis is really hitting the farmers hard. I mean, you're reading stories about dairy farmers pouring milk out, food sitting in, you know, crops unpicked, unharvested, and largely because of the food sector getting shut down. All the restaurants are shut down. So you take an entire segment of the economy, this is the ripple down effect, that it impacts agricultural producers. But on the flip side, you know, we're enjoying a recovery a bit in the orange juice market, which is good. People seeing and understanding that orange juice is good for you and has lots of vitamin C, and that's healthy. So that helps. And I'm hearing from my guys that people, they don't want to buy in bulk. They want to buy wrapped products. And so the bulk sellers of product are really hurting in this agricultural situation as well. One of the other things I want to talk about is single family development as it relates this time as opposed to the 2008, 2009, the Great Recession. You know, a lot of that we experienced in the land market, it really changed for us in about 2006. So in Florida, in 2006, we really started to see the change. People stopped buying, they were canceling contracts. And a lot of that had to do, if you track the interest rates had increased and it just sort of stopped. My personal opinion was Alan Greenspan was too aggressive in lowering rates and too aggressive when he started raising them. And that shut the spigot off, and it really hit us. But there was a hangover from all of that, of course, and it was really a lot of oversupply. My gosh, if I could have counted all the lots that were either supplied or in production or in some sort of zoning land use change, we probably had 3 or 4 times the population of Florida at the time. But all that came to a screeching halt, and a lot of it was oversupply of product, largely driven by loose underwriting standards. And everybody, of course, as you know, is impacted by the Great Recession. And so we have not seen that this time around. The precursor to all of this has been a very disciplined approach. And in fact, I saw, Gary, your slides on the demand, on the housing starts. That's, of course, nationwide. But I think that underscores that the entire system has been way more disciplined this time. So there is still pent-up demand for housing. So I don't think that sector is going to be hit as hard as it was. But, you know, one of the things that we all do is we all look for opportunities. You know, we're in real estate, and there's buyers and there's sellers. And there, you know, you got your Rolodex for when the market's really bad, because that's when the deal hunters come out. And then there's, you know, opportunities to sell when the property gets really high. So, you know, it depends on who you're calling. I'm already sensing that people are anticipating real opportunities as a result of the crisis. And therefore, they think there's going to be a lot of deals out there. And honestly, I just don't see it. I don't share that enthusiasm for tremendous opportunity and deals happening, or at least at the wholesale level. If you go back to, because I'm old enough to have remembered the Resolution Trust Corporation when the Savings and Loan Associations failed in the late 80s, and then the disposition of those assets by the Resolution Trust Corporation. And the Great Recession of 2008, 2009, of course, was driven by financial institutions, and they took product back and then were forced to sell that product at really, really steep discounts to not only perceived values when they made the loans, but real values when they sold them. And there were wholesale great opportunities in both of those situations. Resolution Trust Corporation days in the Great Recession. And so my sense is there's people that anticipate that we might have that opportunity again. I don't see it because I don't see the supply happening. I don't see the crisis. Now, if you're living through it and you're a small business and got a small retail shop, you could really be feeling the pain, and you may have to sell, and you may do some sort of workout with your bank, or you may approach your real estate broker and ask them to help you sell their asset. There will be opportunities. It just won't be at the wholesale level that there were last time, when people were buying developed lots for $4,000 and $5,000 a lot. That ain't going to happen this time around. And it's also helpful to put in perspective what happened in the run-up to some of these these events, and what's happened this time. In the Great Recession, in the land market, in the Florida land market, we had a lot of event sales where people were buying acreage lots on event sales. And an event sale is sort of an auction on speed. It's not really an auction per se. It's here's an opportunity, and we're going to let you come and buy your lot today. And be sure you get the 9:00 a.m. appointment and show up with your checkbook. And they would wholesale sell out these subdivisions for $25,000, $30,000 an acre. And landowners would hear about those valuations. And they'd say, well, my gosh, all you did was you took a 400 or 500 acre tract and stuck a road right through the middle of it and sold it off. I want more for my land. I'm not going to sell it at ag land values or ranch land values. I want $10,000 and $12,000, $15,000 in my land. And that was real. It was real, and properties were selling for that. I remember thinking, there's no way this property is worth that. However, when I looked at comparable sales, it was really hard to justify making the argument that it wasn't worth that, because the comps justified it. But those values, we've not seen those values since in the rural land markets, the recreational lands, the true ranch land market. Ag land market is tied a lot to commodity pricing. It's, was doing well, but the ranch land market is still in that $300 to $3,500 an acre range. Recreational values that market's going to be impacted, because a lot of the demand for that is driven by people who have excess cash and money and decide they want to buy a little piece of land. I think that one's going to suffer the most. So anyway, that's just some of my thoughts about what we're experiencing and what we're seeing, and comparing this to the other events. I just don't see, again, the buying opportunities. And this was truly a black swan event. I mean, it's overused to say it's unprecedented, but I don't know what you do when you just shut down segments of your economy. There will be some winners, there'll be some losers, no doubt about it. And it's going to take a while for us to sort it out. But there's one thing I'm confident in, and that's our ability in this country, with our capitalistic system like it is, to produce. Once we figure out what it is we need to produce to fix this thing, we'll get it back on track. Happy to answer any questions. I think, Todd, you're going to talk a little bit next too, aren't you?
Yeah, I'm on. And I think a big thing to keep into perspective is we've only been in this for 3 or 4 weeks, perhaps 5 in some parts. I don't think the full or even the real effects of values on real estate have hit. I think there's been some jitteriness from people who are in contracts right now, or have been considering something, that they're going to either take a wait and see or extend, whether it's a deal. I know Gary's got several that people are saying, hey, we want to extend our due diligence for another 90 or 120 days. We've all had some deals that we've had to extend a little bit. I think that we're still so brand new into this crisis that no one's got a real firm hand. I think if we are still talking about this in this format and in this form in another 8 months to a year, then I think you're really going to start seeing the pressures on real estate values. But it's just so new. You hear a lot of people that think, we're going to come out of this quicker than we think. I happen to be a believer in that. I don't know whether that's hopeful or prayerful or what, but some of the crises that we've had in the past, notwithstanding the freeze, but in the 08, 09, no one thought that you could sustain real estate values the way they were the way they were going up. So you knew at some point it had to crash. What we're in right now basically happened overnight, and no one had the ability to prepare for it. When you talk about the freezes that we had, that was a huge impact on the ag industry, which, yes, did have an effect on a lot of the other parts of the economy, but the other parts of the economy were still doing okay. Dean, you may want to mention, I think you touched on a little bit, the difference between the farmland with commodities versus rec land. I think prices won't be affected quite yet, other than there might just be fewer buyers and sellers in the market, but I'm not sure prices are going to be changing too much in the very near future. I think if we keep dragging on like this for several months, then the reality may set in that we're not bouncing back. But I think we're going to be okay coming out of this. I hope we are. The hospitality industry, like Gary said, has been immediately affected when they had to shut down. A lot of other industries, like our real estate company, we just shifted from working at the office to working at home. It'll be interesting to see what our productivity of our advisors and our staff is versus what we were a month ago. And you look at other businesses of how their productivity is when they're working out of home rather than in a work environment. It'll be interesting to see how that all shakes out, but I think we're going to be okay. Again, we've had the ability and the luxury of having Jerry's thoughts on what's coming. We've had Gary and Dean to talk about what we've had in the past. So I think we're still looking and evaluating. I'm not sure anyone has a real good handle. Jerry's got a better handle, perhaps looking at trends, but these trends are 2 and 3 and 4 weeks old. So it could turn quickly. A vaccine could happen. That's a game changer right away. But I think we're going to be okay when we get through all this. I do think it's going to be a shorter downturn than a longer one. I like to think that we'll be doing better in the third quarter. Jerry had said third to fourth. I'm pulling third quarter, so we'll get out of it quicker. I hope I'm right. But, we're going to be okay throughout this whole thing. We just have to, be flexible and paying attention to what's going on in the market. And, I think we'll be okay.
Yeah, I agree, Todd. And thanks for adding that. And I think you're right. I mean, we've talked a lot about where we've been, where we're at currently, kind of moving forward. I think what we're trying to be is a resource to people. And that's the reason for us doing these webcasts. And so with that, I'm going to launch polling question 2. We just want to get a sense from the audience of what, you'd like to see us do next. What are some other topics you want us to answer and to discuss? And so one of them was kind of a federal tax overview, different tax provisions that are applicable to landlords, to tenants in the real estate market. Another one would be maybe how to go about identifying certain buying opportunities. Another on property management services. What does that look like? What are the benefits there? We thought we might try to use some of our I-4 corridor conference information and materials from last year, and also people who are going to present this year, because we're probably going to have to push the date on that to maybe do some presentations moving forward of those issues, such as Florida road expansion plans, maybe opportunity zone guides, and kind of where that program stands right now. So if everybody doesn't mind, chiming in with your opinion and of what you'd like to see, and we'll take that into consideration. We do have a few minutes for Q&A. You'll see all of our contact information here. If you have questions moving forward, feel free to reach out to us and we'll try to answer them as best as we can. Dr. Parrish, one question kind of to start things off. The CARES Act, it was passed a few weeks ago. There's been obviously a lot of discussion about it. PPP program is available to small businesses. It sounds like the money is maybe starting to dry up a little bit. People started to get their stimulus checks early part of this week. What's your take on the CARES Act, its impact on our economy? Do you think it's enough? Do you think we're going to need more federal funded assistance to small businesses, to individuals, more unemployment benefits expanded, things like that?
Tyler, that's a really good question. It's one that I've gotten a bunch lately. First of all, let's talk about what the Fed did and then what the Congress did. For those of you that really hadn't paid attention, the Federal Reserve has really opened up the checkbook to make sure there's liquidity out there in markets. And then the CARES Act passed by Congress is certainly intended to keep businesses in business and keep people getting paychecks, keep them on the payroll. And I saw in the news today that the small business loan, the forgivable loan, has $349 billion. But I believe there's going to be such an outcry for Congress to top it up with extra money that I don't believe we're that far away from doing that. And I've had reporters ask me, was that the right thing to do? And I've said, yeah, that's exactly the right thing to do. This is something that it's not a business cycle recession. It's one that's been forced on us and forced on us for a good reason, to help kill this virus. So helping people stay in business and helping people keep their paychecks, keep their families intact, and businesses open, or at least ready to open when we're back to do that, I think is the right thing. But I do think that you'll see some more funding coming in from Congress. I've already heard people talking about that certainly there's the demand out there. And I figure there's a pretty good probability that's going to happen.
Yeah, thanks. I agree. And I think it's a pretty good bill, and I think it's really helped a lot of people, and hopefully that continues to happen. Gary, this question I think was for you. It goes back to your point that half of all retail tenants are trying to seek either a rent deferral or rent abatement. And then a third of all residential tenants are not paying rent. Someone asked, where did those numbers come from? Can you talk a little bit about the trickle down impact of that? And if people continue to try to not pay their rents, kind of what's the long-term implications of that?
Yeah, there were a couple of general commercial broker and property manager interview and surveys that were done that I kind of combined together to anecdotally come up with the response. Some of this, particularly in Florida, has been related to actions by specific companies. The malls, and when the expression was about half, clearly nobody in the malls is paying rent. Or not trying to pay rent without some sort of objection, I should say. So that's been a major issue. There have been a couple of bulletin comments by CMBS servicers about that topic. The other end of the spectrum is that there are many retail tenants, and I mentioned some of the leaders, the Walmarts, the grocery stores, the discount stores, the dollar stores. They're paying rent, growing, hiring people. And so there is very much a barbell on what's going on. Restaurants have suffered probably more than anybody else in the retail sector, along with gyms and small retail providers. The problem about rent collection is the Publix did this kind of unilateral, they're going to agree to waive or renegotiate rent for 60 days. And I think that's the feeling in most places. The landlords that we've come in contact with and dealt with, and the national tenants, there are a few of them trying to negotiate. They're thinking more about a 60-day type window with support from the SBA loans and provisions that Jerry mentioned. So if things continue for 2 quarters, it's going to be a different world. If it wraps up in 90 days, we see real estate in general bouncing back. People will get back in business and start paying rent again if they weren't. So it will be a good day.
Well, I think that answers all the questions that were submitted. Thanks to everyone for participating and for submitting questions. This webcast is going to be recorded and posted on our website, svnsaunders.com/coronavirus. We've done 3 or 4 of these now, and so each one of them, along with the slides, is posted online for your reference. We're going to try to plan to have 1 webcast a week moving forward on different topics as we discussed. So keep an eye out for the next webcast announcement. Dr. Parrish, thank you so much for joining us today. Wealth of knowledge. We all learned a lot. I know I personally did, and I'm sure all the participants did as well. So thanks again. We can't thank you enough for being a part of this.
Thanks for having me.
And thanks for your work that you're doing to help keep Florida afloat during this tough time. Thanks again to everyone for joining us today, and let us know if you have any questions moving forward. Thanks again, and have a great rest of your day.